Welcome back to Crypto Academy. If you watched my last video, you already knew this move was coming. And if you didn't, that's exactly why you need to stay until the end of this one. Because right now, Bitcoin is sitting at a zone that is going to decide the next major move. And most people have absolutely no idea what's about to happen. Exactly as discussed in our previous analysis, BTC respected the resistance zone with surgical precision and reacted right from the 200 EMA and 200 SMA on the higher time frame. No guessing, no luck, the market followed the roadmap. Traders who followed that setup had one of the cleanest opportunities we have seen in weeks. That's what technical analysis done properly looks like. No noise, a structured plan executed with patience. Now, the next chapter of the story is being written, and it is just as important, so don't look away. On the daily time frame, the rejection is still loud and clear. The major resistance area around the 200 EMA and SMA is holding strong. Sellers are not just sitting there, they are aggressively defending the upper zone. This is not a small reaction. This is the kind of rejection that changes the momentum on the higher time frame. And the daily chart speaks clearly. And when the daily chart speaks this clearly, you listen. Short-term noise doesn't matter here. The bigger picture is in control. Now, dropping on the 4-hour time frame. And here is where it gets really interesting. Bitcoin is breaking down from the rising wedge structure we have been tracking. That's a bearish signal in the short term. The wedge has finally cracked. And here's the thing, and this is critical. A breakdown does not mean panic, it means opportunity. Because right now below this breakdown, the market is heading straight toward one of the most powerful zones on the chart. And here's where the real story begins. The most important area on the entire chart right now is the 77,500 to 78,000 zone. And I want you to understand why this zone is so significant, because it's not just one reason, it's 4 reasons stacked on top of each other. Number 1, point of interest. A major point of interest where the price has reacted before and where the institutional orders are likely resting. Volume. High volume support area. Real buying activity concentrated at this level from the previous sessions. 200 EMA SMA. Both the 200 EMA and 200 SMA on the 4 hours are converging right here. A powerful dynamic support. Liquidity. A major liquidity zone. Stop loss is stacked below, which means the market may come down just enough to sweep them before reversing. And when 4 confluence factors align at the same exact level, that is not a coincidence. That is the market telling you exactly where it wants to go. The question is, will buyers show up when it gets there? The key levels at a glance are the daily resistance, 200 EMA and SMA, the decision zone, a 77,500 to 78,000 zone, the bounce target of 81,000 to 84,000 area. And the pattern is a wedge breakdown. Why liquidity is everything? Let me explain something that most retail traders completely miss, and it's costing them money every single cycle. Markets don't move randomly, they move where liquidity is. Right now, there is liquidity resting below the current support. Those are the stop losses of traders who bought too late, and there is liquidity sitting above the previous highs. Those are the stop losses of the short sellers. The market is like a heat-seeking missile for those stop losses. It will sweep below the support, grab that liquidity, and then it may reverse hard to the upside. That is not manipulation, that is how markets work. Understanding this is the difference between panicking at the bottom and buying at the bottom. Now looking at a scenario where the supports hold. If buyers step up at the 77,500 to 78,000 zone with strong volume, this pullback transforms into a launch pad. What looks like weakness right now becomes the healthiest retest inside the large bullish structure. The bounce target in that scenario will be the 81,000 to 84,000 zone. But remember, you need volume confirmation. A wick into the zone without volume means nothing. A strong close back up above the support with a rising volume, that is the green light. On the other hand, if sellers show up with heavy volume and push through the 77,500 without a bounce, then deeper downside levels open up. This is not the base case, but it is a scenario you must be prepared for. And remember, the market rewards the prepared and punishes the hopeful. If that happens, don't chase, don't panic sell. Wait for the next confirmed support zone and let the setup come to you. Patience is a position. Now for the clean technical picture, the confirmed signals. Rejection for the higher time frame resistance, confirmed. Rising wedge breakdown, confirmed. Liquidity sweep potential below the 77,500, in play. Strong support and POI at the 77,500 to 78,000 identified. The possible bounce zone towards the 81,000 to 84,000 on the radar. The chart is technically clean right now. Everything is lining up. There is only one variable left. execution. So here's the mindset right now. Not panic, not FOMO, pure patience. The market is handing us a roadmap. The spot is identified, the levels are clear. The only thing left to do is wait for confirmation and execute with discipline. The traders who win in this market aren't the ones who trade the most. There's the one who wait the longest for the right setup. Be that trader. If this analysis helped you, smash the like button and subscribe. Share it with someone who needs to see this before making a huge mistake at this level. I'll see you in the next one. Peace.